Hi everyone, myself is Keerthiga, Assistant Professor, Department of Commerce SF, Fatima College. Today's class we are going to see about the valuation of goodwill, which is from the corporate accounting. It's very important topic while valuation of goodwill. When we are purchasing a company, when we want to purchase a company, surely everyone will be keep in mind about the goodwill of the company, so then only we can able to run their business. So it's very important topic. The meaning of a goodwill. So goodwill is nothing but it is a reputation of the company will be earned, and it should be calculated only in a numerical form. It is unquantified data. So goodwill is an intangible asset. So it is a value of the business over and above the value of an asset. The difference between the purchase price and the value of the net asset. It has a positive impact on the future turnover and profit of the business. There are certain factors which will affect the valuation of goodwill. While purchasing a company, will be keeping in mind that the company should have a good relationship with the public as well as the customers. So the company should have regular customers, the quality product in a very reasonable price. So they should have some managerial skills, and the location of the business also very important. Good relationship with the suppliers and employees. These are the factors when we calculating the problem we have to keep in mind. Methods of valuation of goodwill. There are various methods of valuation of goodwill. The first one is a simple average profit method. Second one is super profit method, weighted average method. Fourth one is capitalization method. In capitalization method, there are two methods subdivision, that is an capitalization of average profit method, capitalization of super profit method. First we will see the simple average profit method. In simple average profit method, first we have to calculate the average profit. That is an average profit is nothing but in problem they will be giving the number of years of profits. So we have to add all the profits, that is a total profit divided by number of years. Next we have to calculate the goodwill. So the goodwill is equal to average profit into number of years of purchase. So average profit is already calculated into number of years of purchase will be given in the problem. So the number of years of purchase means the firm is likely to earn the same amount of profit for the consequent 2 years or 3 years. So the number of years of purchase will be given in the problem. The things to be considered before calculating the average profit. So if the company is getting any abnormal profit, for example income from investment, if the company is getting any income from investment, we can say it is an abnormal income. So it should be deducted from the net profit of the year. Next one is any abnormal loss should be added to the net profit of the year. So abnormal loss is nothing but an unusual loss. We'll say in business it is an unusual loss. For example, if there is any theft or a flood or a fire occurrence has been happened in the company, so it is all called as abnormal loss. So during the year, if the company is facing any abnormal loss, it should be added to the net profit of the concerned year. Next one is non-operating income. So the non-operating income is example income from investment. It should be deducted from the net profit of the year. We'll see one problem. The illustration 1, the following details are about the Alpha Limited. The profit of 2010 it is in 1 lakh, 2011 it is in 1 lakh 25,000, 2012 it is in 1 lakh 40,000. Next one is the profit of 2010 has been reduced by 15,000 because the goods was destroyed by the fire. So I have already told you, if the goods has been destroyed, fire means it is an abnormal loss. for the business. Next one is non-recurring income. So I already told non-recurring income, that is a 10,000 is included in the profit of 2011. Next one is the profit of 2012 include 10,000 income from the investment. So calculate the goodwill on the basis of 4 years of purchase of the average profit of last 3 years. In first year 2010 the profit is in 1 lakh. So already we have seen the calculation, we have to add 50,000. So in 2010 we will get 1 lakh 15. In 2011 1 lakh 20,000, 1 lakh 25,000 less 10,000 will get 1 lakh 50,000. In 2012 1 lakh 40,000 less 10,000 will get 1 lakh 30,000. Average profit, or we can say it is a future maintainable profit, the total profit divided by the number of years of purchase. So 3,60,000 divided by 3 will get 1,20,000. So the goodwill formula is a future maintainable profit into number of years of purchase. So 1,20,000 into 3 will get 40,000. Next method is a super profit method. The goodwill is calculated on the basis of super profit method, but when the companies get an excess of actual profit over the average profit, only the company will calculate the super profit. The goodwill is equal, the formula for the super profit method is a goodwill is equal to super profit into number of years of purchase. Super profit is equal to average profit minus normal profit. Normal profit is equal to capital employed into normal rate of return divided by 100. We will see one problem with the super profit method. In super profit method, maximum they will be giving the average profit, capital employed and everything. So the illustration number 2, the problem is average profit is 60,000, capital employed is at 5 lakhs, the NRR is at 10%, that is the normal rate of return. Calculate the goodwill on the basis of 4 years of purchase of the super profit of last 4 years. The normal profit is equal to capital employed into normal rate of return. So 5 lakhs into 10% will get 50,000. The super profit is equal to average profit minus normal profit. So we will get 60,000 minus 50,000, it is a 10,000. So the goodwill is equal to super profit into number of years of purchase. So 10,000 into 4. So ultimately the goodwill value is 40,000. Next one is weighted average profit method. There are various methods has been followed. In weighted average method, it is more or less similar to an average profit method, because each year the adjusted profit is or multiplied with the respective number of weights in order to calculate the total product. The total of products then divided by the total of weights to calculate the weighted average method. So in every year of profit the weight has been given, so we have to multiply with the profit, so we will get the total value. The formula for the weighted average profit is total products of the profit divided by total weights. The total weight should be calculated for 5 years. If the 2, 3, 5 has been given, the weight has been assigned in the problem, we have to add all the weights and it is a total weights. The goodwill is equal to weighted average profit into number of years of purchase. The next one is a capitalization of profit method. A. Capitalization of average profit method. B. Capitalization of super profit method. So capitalization of average profit method, the formula is very simple. Average profit divided by NRR into 100. Capitalization of super profit method is equal to super profit divided by normal rate of return into 100. So it is a very simplest method of calculating the valuation of goodwill. When we are thorough about the formulas, we can able to do the problem. So thank you so much for listening our video. Thank you.